Traders, how are you doing today? We were asked a question how to deal with ups and downs in the market. So, this will be a trade psychology note for traders trading all currency pairs. Our focus is gold. When you have great money management, then the ups and downs in the market should not affect you. You should never have fear when you trade. So when you have great money management and a great trade plan, so this trade for this week of January 11th was already planned out at the beginning of the week. So every trading day we draw supply and demand and support and resistance every single trading day. So before we traded this trading day, we had already we had already posted the 1800 monthly and weekly, 1880 and the 1885 monthly and weekly supply and demand support areas. We had already drawn those out. And then we confirmed those based on this area right here, these areas right here, these highs and these lows. These are weekly highs, weekly lows. And then we went over to our monthly chart. These are monthly highs, monthly lows, monthly opens, and monthly closes. Those will always be institutional supply and demand areas. How do we know that? Because we have studied our charts, and institutions move the market up and down every single month at these areas. So that's how it's confirmed. The data does not lie. And again, our methodology is based on order blocks, supply and demand, support and resistance order blocks. Now remember, the market will not move unless there are market orders. So how do we deal with the market ups and downs? Ups and downs in the market. Well, if we have a trading account that has $100 in it, and we only trade 1% to 2% of the count per trade. That's great money management. Meaning, if we only trade 1% of the trade, that's $1. Now, if you scale that up, if you have an account that has $100,000 in it, and you only trade 2%, that's $2,000. So when you have great money management and you only risk 1 to 2% per trade, then you're free to trade this area as we drew our supply and demand support and resistance in this area. We expected the area to either move up or move down, but we planned this trade. Then we received our signals to go long or short on January 11th here, 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 and here. Between the 1880 and the 1885 area. So because we had already planned this out, we had already planned these areas, then we can actually comfortably get into trades with great money management, and then we can plan our trades and our stop losses with great money management. So this trade on the intraday trade for January 11th trade signal, we would have entered here. We would have placed our stop losses above above the area, above this area here, and then we would have let the trade play out. But let's say the market went, sometimes on your broker feed, the market may do what's called stop hunting, meaning before the market makers or your broker pushes the price down, they may push the price up into these stops where you've placed your stops, and then reverse the price to go fill these orders down here. That happens. If you've been trading long enough, then you know that happens on some broker feeds. So how do you deal with that when you trade? Psychologically, you should have no fear in trading because you already have your weekly trade plan. We already planned this trade and we planned our stop losses. And then as you continue to trade and trust your trade plan, then your numbers are going to work out. Meaning if you look at the supply and demand areas and you trade once the price reaches these areas, now you only needed two trades this day. Then you would have traded one trade here and then one trade here. But look at what you have on the intraday trade. You have a pre-drawn supply and demand support and resistance area. You're only risking 1.5, 1% to 2% per trade. So you could actually have 100 losing trades and still have an account. And then your one winning trade, this trade would have been almost a 100 to 1 win ratio with this stop loss placed here and this market move during the London session. And again, you have to understand the daily moves usually happen between the London and New York sessions. And that's when we do our session studies. So if you weren't up at the New York session, the London session, and you're trading in North America and you didn't get in on this trade, then we already had this line drawn here for your New York session trade level. How do we know again? Let's go to our monthly chart, remove drawings, and this was already drawn. Let's go to our monthly chart, draw our supply and demand support resistance area, and then we will go to it was the one below. Then we go to the New York session, go back to the monthly weekly chart, all right, that lines up with this one right here and this one right here. So these areas were already drawn before the session began. So when price, your second trade of the day, when price entered into this area, you would have placed a long trade based on price action confirmation on the 15-minute pin bar, 5-minute 2-bar, 3-bar reversal, and the 3-minute pin bar, 3-bar reversal. So this is an up in the market and the down in the market. Your trade plan removes the fear of the ups and downs in the market because you are training yourself to know with a degree of predictability during the day, during your trading days, where price will move up and where price will move down. This happens every single day during the market. when you look at these bars that they're giving you data, when this bar entered this area on this day, right here, then the price retraced 1,000 pips. Well, that's on the week. These are weekly bars. So again, the way that you remove psychological fear for trading is you have great money management, great risk management per trade, 1 to 2% per trade per your account value, and then you have a great trade plan. A great trade plan, meaning that you have trained your eyes to see where the market will move, and then you've trained your eyes to know during the market when the market will move. That means there's a lot of volume coming into the market during the London session and during the New York-London overlap. There's a lot of volume when the New York session starts. So that's when you get your daily moves. Alrighty, managing risk and having a trade plan will allow you to deal with the ups and downs in the market. Trade psychology note. See you on the next video. Impact Trading Services.